either on Friday, Saturday, or Sunday. Today it's quite late because I was out of town and we had some technical issues. So today, the topic is quite controversial. Are we in a bear market? This thing has been worrying me since quite some time, and I had contacted my friend Prashant Krishna, who lives in Bangalore, and between us, we looked at data of all the 2,000 plus stocks on the listed on the NSE, and how have they performed vis-a-vis their 52-week high. And we were quite surprised. Actually, we were quite shocked that the data has brought out something which are very disturbing, I would say. The last time we had done this comprehensive study was sometime in mid 2022. At that point of time, the data showed us that nearly 50% of the stocks on the NSE were down by 50%. That was quite a amazing set of data, but that also gave us that positive feeling that the worst is probably over, though the indices were still plumbing lower and lower. Bank Nifty had already bottomed out in March 2022, so had the auto index and so had the FMCG index, but the Nifty was still struggling, and finally it bottomed out to 25,200 in June of 2022, and subsequently we have not seen it back. So that is the kind of data drilling which we did. Thanks to Prashant. With my request, he came back with the new set of data, and that data is somewhat worrying. If you really look at what has happened, let's just see whether I can give you that data. Yeah. So here is that data. So we have now looked at all the stocks, more than 2,065 stocks. And if you see the drawdown, that is the Friday's closing vis-a-vis what was the 52-week high. So there are about 341 stocks, which is about 17%, which are down anywhere between 0 to 10%. So they are okay. That is there at best, you can say a reaction, not even a correction. Then there is about 31% of the stocks which is between 10% and 20%. Now 20% is considered reaction as a correction, and 20% and above, that is when it crosses 20% in terms of fall, then it considered a bear market. That is a general definition. So if you add these two, cumulatively 48% of the stocks traded on the NSE are well within a bull market correction. They have not entered the bear market. But if you eliminate 48%, then 52% of the stocks have entered a bear market. That is a classic definition of a bear market of 20% or more from the 52-week high. Of course, people will look at bear market in terms of higher lows, lower highs and lower lows as one way of looking at it. But if you simply look at in terms of numbers, this is what it says. 52% are in bear market. So there are about 572 stocks which are between 20 and 30%. So that is 28%. Above 30%, 15% of the market is fallen more than 30% from the 52-week high. The 6% of the market has fallen about 40%, and there are 2% which have fallen 50% from their highs, and 1% above 60%. So by all practical purposes, we are now in a significant bear market for a lot of stocks. Even if you take out, this one, you can say 15% plus 6, 21, 23, 24. 24% of stocks have gone down below 30%, which is certainly. So we need to just consider that, people are talking of the index bull market and why are we worried and all that. We should be worried because we are stuck in the stocks, because we talk of index, but at the end of the day, we are still stuck in stocks. So let us look at what is happening on the indices. You see, these four moving average, these are moving averages, exponential moving average. The first one is the red one, which is 9-day. The 20-day is the ultramarine blue, and dark blue is the 50-day, and this is the 200 DMA. So of course, if you say anything about 200 DMA is bull market, so we are in a bull market. We are Only if it falls below 23,100, then we can consider we are into bear market. So even the June 4th low, we have not gone into the 200 EMA. So we are okay there. But if you look at 9 EMA, we are now trading for the last 3 days below 9 EMA. And 20 EMA, we are trading last 2 days. 50 EMA is where we have taken support. So when did we last take support in 50 EMA? Was in August. Because of the end crisis, the markets fell down. It fell down close to the same percentage of fall which we have had last week, which is about close to 5%. But when all was gloom and doom, it bottomed out at the 50 EMA and then took off and then crossed both 9 and 20. And when again it fell in early September, it only went and took support at the 20 EMA. So the market seemed to be strong. But now the second time, we are now attacking the 50 EMA. Prior to that, prior to the August one, what we saw was somewhere in June, it broke the 50 EMA, came close to 200 EMA, but then bounced back the next day and closed above the 50 EMA. So while not all the time the EMAs really give us some, I would give the correct picture, but by and large, these could be used vis-a-vis other indicators. And you can look at Bollinger Bands, you can look at various other indicators to make some judgment about where we are in the market. Right now, we are 52% of the stocks, that's half of the market, is in bear market territory clearly. 25% of the market is in steep bear market territory, which is between 30 and 40%. And as far as the indices are concerned, while we are still in bull market, we are struggling. Though on Friday, for instance, we got some, on an intraday basis, if you look at it, while Nifty struggled through the day, it closed almost at the lows. But if you look at the Nifty Junior did not make a low what we saw in the morning. But Nifty made. If you observe, Nifty made a new low at the fag end of the day, that's around 3 o'clock, and then bounced back slightly. Now, if you take at mid cap, for instance, mid cap did very well that day vis-a-vis Nifty and Bank Nifty, whereas the morning low at 9:30, what we saw, we never saw it even at 3:30 when 3 o'clock when the Nifty made a low. Same thing with the small cap and then the micro cap. So we did reasonably well on the broader market on Friday. Now, Friday was a time when everything wanted to go wrong, was trying to go wrong. So one would have expected that the fall. But the fact that the mid cap, small cap, and micro cap recovered gives us hope for next week. So tomorrow is a day which is a very important day because tomorrow is also the first anniversary of the Hamas attack on Israelis, October 7th of 2023. It happened, and that is when the Palestine-Israel war started. So now there is a fear that Israel may attack Iran. In fact, Iran, as we speak, has taken precautions by closing their airspace for next 12 hours. So they are expecting some attack to come on their oil facilities. However, if you look at what happened globally, you'll see that the US market, after the good jobs data, fell down in the initial point of time and then went on to close to a new high for the day. If you take even Nasdaq did the same thing. It almost went to the morning high. This was the morning high after the good employment result numbers came, and then it went there to close almost there. And S&P made again a day's high at the end of the day. So that is something very interesting and which we can take heart from, that the US markets are looking strong. So did if you look at what is that, Nikkei was strong in the morning. Hang Seng went up by about 625 points. Then Singapore did very well on Friday. This is all on Friday. So, and DAX went up by about 100 points. So all of them did very well. Only India did badly on that day. China is opening on Tuesday, so we have respite tomorrow. FI sold heavily, but things were not that bad. Actually, things were very good when compared to the fear which we had. If you really look at what happened in terms of USD JPY, which is the bugbear where that carry trade, it did very well. In the terms, it lost. It became weak, which means it is good for the dollar and the overall market. So that's dollar went up, and then the USD JPY, because the Prime Minister of Japan now is become a big dough. Oil, which was very surprising, it opened up higher, and if you look at it, strangely, this was the high. This was the high at around 10 o'clock, and then it fell down from 79 and odd 27,925. It fell all the way more than $1. So if you really look at it, you forget about what Iran is doing. If you just look at what is happening, you feel that there will be no attack by Israel on Iran. But you never know. Politicians are stupid, and they may create something. This is my worry for a bull market, for our Indian bull market and the global bull market, that if there is no war, then we will see some significantly higher numbers in the next few months globally, and we should follow. However, we will shoot ourselves in the foot because of RBI and because of government policies. That notwithstanding, I think we've got some more distance to go if we follow the global markets. Historically, that's what has happened. 10 to 15% after the first interest rate cut is there, and so therefore we should expect a 10 to 15% on the Nifty. However, not all stocks may participate, but this is what it is. But if the Israelis decide to do some mischief tomorrow or in the following days, and Iran retaliates, then all bets are off. We can only predict as much as we can see as of now. As of now, it looks like it is not a bad shape. There is a possibility that we can see better numbers. Of course, the Haryana J&K results will come on Tuesday, so that may create some volatility. Wednesday is the RBI policy, that may create some volatility. I wish RBI becomes sensible and cuts interest rate of 25 basis points. It is not, I am asking this. Governor Rangarajan in his recent interview with CNBC said a 50 basis point cut also can be done, but at least you should start with 25 basis. However, all analysts are expecting that there will be no cut. At best, it will be dovish. I think RBI is behind the curve. When every other central banker in the world, excepting Australia, are cutting rates, we have no business to be holding the rates as it is. So Australia is having a problem of severe inflation. We do not have that. We are seeing growth is poor. When growth is poor, the first thing the central bankers all over the globe do is to bring in liquidity in the market. We desperately need liquidity in the market. It is like, we are overheated, maybe we are obese, so you want to go on a diet. You go on a diet. That is what RBI has done by keeping interest rates high. But now the diet has become so severe, and what we call fasting diet and other diet, that now you're losing muscle. When you begin to lose muscle, then it's very difficult to come back. Fat you have to lose, correct. That is why you have high interest rates. But now I think it is attacking the muscle. If you look at the GST numbers, they are quite sad. If you look at quite a bit of corporate numbers, they are not that good. Dabur, for instance, gave a profit warning. DMart did not do too well in their sales. So this is telling you the economy is weakening. RBI has to get awake, and then do something on the interest rates. So I will end here. Tomorrow morning, I'll come back with the daily morning report, pre-market commentary. Hopefully by then, things will be much clearer. I only hope and pray that Israel doesn't take action which can precipitate global peace. And let's hope for the best. And I hope you enjoyed this. Thank you for joining me.